it's obviously going to change the whole market dynamic. It makes Bitcoin.
Welcome back to Let's Talk Forex. I'm Chris, and as always, I'm joined by Alison. Hello, Alison. How are you today?
Hey, Chris. Good. How are you doing?
Yeah, no, I'm good. So we're going to be talking about crypto, but before we jump into that, should we have have a look at what's been going on in the last month or so? You know, where the price flows are and what sentiment it's doing.
Absolutely. So, in August, we obviously saw Bitcoin rise dramatically. We saw it reach highs near $124,000. But by the end of the month, it actually retraced down about 7 or 8%. And in the meantime, we had a strong run on Ethereum, pulling in around $3.87 billion into Ethereum products in August. But then, of course, in September, we saw, things sort of settle down a bit, and Bitcoin dropped below 110,000, and leveraged bet liquidations, I think, added pressure as well there. Recently, though, we've seen Bitcoin bounce back sort of into the 111,000 to 114,000 range.
Yeah. There has been a bit of a bounce back in recent days. And what's interesting here is institutional flow behavior. And there's something that we've talked about before, but there's a lot more institutional capital now in crypto, but there seems to be some kind of rotation underway. A lot of the capital that was originally favoring Ethereum has now rebalanced towards Bitcoin again. And on positioning data from Coinbase, pulled some data from Coinbase at the end of August, where Bitcoin is showing a really heavy long bias, while Ethereum is much more neutral. And the option skew do reflect some hedging here. And I think this is a lot to do with, with the state of the markets, as it were, in August. I mean, as we talked about in the live stream with Michael Brown, I think Bitcoin is seen as a little bit safer than Ethereum.
Yeah, I mean, it's not quite the wild run of 2021, but it's not the crypto winter of 2022 either. In fact, I would say, 2025 feels like more of a selective cycle. So some assets like Bitcoin, as you mentioned, are doing really well, and these are probably helped by institutional flows as well, while others are lagging. I think the crypto market is maturing, and the drivers are less about hype and weird names, and more about macro forces, regulation, and I guess innovation as well.
Yeah, exactly. And I think this is true, this maturation of the market. And then you're going to get winners and losers. But let's start with these macro forces here. So, rates, inflation, risk appetite, all this stuff that we usually talk about when we talk about Forex trading. How are they influencing crypto at the moment?
Well, they're huge drivers. And as we said, previously they sort of were quite disconnected. But for example, the expectations of the Fed easing this year have been quite a tailwind, and the lower rates make investors more willing to take on risk. And Bitcoin, with the fresh highs in August, it was on the back of the bets that the Fed would cut rates. But then there's also inflation, of course. So if it proves sticky, then the central banks will stay cautious and probably keep rates the same, which will pull the money out of crypto. So crypto really is trading more and more like a risk asset, I guess you could say, to, the global macroeconomics.
Yeah, it is. And it's tied exactly like that. And I think specifically Bitcoin as well, it's becoming less of a wild card. It's kind of moving out of like the crypto sphere and becoming more of a normalized asset. And it's becoming more correlated with equity prices and global capital flows.
Yeah, and a lot of studies are actually showing quite a strong correlation between that and the NASDAQ and the S&P during certain regimes. And institutions, as I said, are a big part of that story. So exchange-traded products, for example, of Bitcoin have really opened new channels, with regulation allowing Bitcoin ETFs. Pension funds, asset managers, and even corporate treasuries are getting more exposure. And that increases the supply, and then, of course, deepens the link to crypto and mainstream finance.
Yeah, exactly. And yeah, that correlation, as you say, between where mainstream finance usually puts its money and the price of Bitcoin in particular is definitely becoming stronger. But speaking of supply there, I mean, Bitcoin's scarcity has always been one of its main features and has always been a part of the narrative here as well. And I think that's something that you've got to take into account. It's when we talk about real assets, other big financial assets. Bitcoin is quite different in that way, and I think that's still got a role to play. Governments are also getting more involved now as well. So you can give us a brief rundown of what's been going on over the last few months.
Yeah, I mean, it's quite a new angle. The Trump administration has floated the idea of a strategic Bitcoin reserve, and they're using seized or forfeited crypto, which really is a new angle. And if governments start basically holding the crypto as a strategic asset, like gold reserves, it's obviously going to change the whole market dynamic. It makes Bitcoin not just a speculative tool, but potentially a geopolitical one.
Yeah, no, it does. I agree with that, and I think the consequences of that are unknown at this point, really unpredictable. But what it will do is obviously create that support base. It's what we were talking about when we were talking about gold last week. Central banks buying up gold gives this support, and it never lets the floor drop too deep. And I think the same thing would happen if we end up with strategic Bitcoin reserves. Let's have a chat about regulation, because that's something that's changed a lot in the last year, especially since the Trump administration came in. It's always been it was always the elephant in the room. But as I said, there's been a lot of changes.
Yeah, I mean, we see the Genius Act was passed in the US earlier this year, and that obviously creates clearer rules for stablecoins. And banks now issue them under very strict oversight, which legitimizes this part of the market, which wasn't legitimate before. And in Europe, obviously, we're seeing MiCA, so the Markets in Crypto Assets Regulation, and it's also taken effect, which gives a legal framework for crypto services and tokens. And even in the Middle East and Asia, we're also seeing, places like Singapore and the UAE positioning themselves as global crypto hubs. And they are also bringing in more regulation. And we're seeing the same in South Africa. The FSCA definitely has clamped down on how crypto exchanges run. So, yeah, there's huge regulatory oversight coming in at the moment.
It does seem to me that it's not just about cracking down anymore here. It's about enabling adoption, creating a safety net for consumers and also for big institutional players. It's creating a situation where big money can move in, and it can move in safely, and it can expand this asset class into something much larger than it is already, which is really interesting, because it wasn't even that long ago that all the regulators were screaming about crypto being an awful and terrible thing, and that consumers should stay away from it. And it seems like we've had a big pivot. Let's talk about technology behind this, because beyond price action, there's a lot of exciting things happening on the innovation front as well.
Yeah, I mean, I think the top of mind is AI and blockchain that are converging. So we're seeing AI used for on-chain analytics, which is quite an interesting move. It's also being used for fraud detection and even automated trading, which I think a lot of institutions have adopted. And also, second, we're seeing real world asset tokenization is also gaining steam. Things like real estates and bonds and commodities also being issued on the chain. So that's attracting a lot of institutional capital, and it feels kind of familiar that lives on the blockchain rails, I guess.
Yeah, and another aspect I think here is people need to be aware of is decentralized finance evolving. So you got protocols that are becoming more modular, they're more user friendly, and then becoming more interoperable across chains. And these hype cycles that we used to see before are giving way to projects actually have utility. And as you say, the more utility they have, then the more institutional finance comes into it, because they feel like this is something that's safe and they understand. So I think what we're seeing here is it's less about meme coins, which we've discussed in the past, and more about real financial products that are coming into the market.
Yeah, I mean, the market is basically punishing projects that don't deliver at the moment, and investors are getting more selective. And, that's really healthy for long-term growth.
Yeah, I agree. But before we get too optimistic here, let's balance things out a bit. What are the risks that could derail this momentum?
Well, I guess there are several. If regulators backtrack and impose very strict rules, it could obviously choke innovation. And I think that's something a lot of people are worried about at the moment. Then macro shocks like a sudden credit crisis or an inflation spike obviously could hit all risk assets, including crypto. So I think that's why we're in a particularly delicate position at the moment with what's happening with the Fed. We'll see whether the labor statistics come out at the end of this week, the NFP. Yeah, and then don't forget the impact of mining. That's obviously still very politically sensitive.
Yeah, it is. And of course, there's always technical vulnerabilities as well. There's always, we always hear about this every few months. Someone's been hacked somewhere. And that's, I think, a constant risk in the background. But right, obviously, we've got these risks. And I think you made the clear point there. And I agree with you. I think the macro risks, especially now we were talking at the top of this about how tied Bitcoin is to other more traditional assets in terms of correlation. I think these macro risks that we're looking at, inflation rates, etc., any kind of crisis that moves away from risk assets would I'd say for me is the biggest risk for Bitcoin in particular at the moment. But if you had a few key signals to watch in the next few months, what would they be, Alison?
Well, I guess I'd highlight three. So institutional flows into ETFs and other vehicles, obviously. Then regulatory developments, as we were talking about just now, around stable coins and government reserves. I think that's a huge one to watch, and I think it's something that affects all countries, and a lot of regulators around the world are stepping in on crypto at the moment. And then the adoption of tokenized assets. So if volumes keep rising, it's a strong signal that blockchain utility is probably here to stay. And it's something that we're going to have to take on board and get used to and look at like we're looking at AI.
So yeah, to sum it up, crypto in 2025 isn't just about hype cycles anymore, though there is always that aspect in the background, and I think there always will be. But the big money now is being driven by macro forces in these institutional flows, as more regulatory clarity and more regulatory kindness, if you want, rather than seeing Bitcoin as an enemy. And also this real technological innovation, as you're talking about there, with AI and this tokenization. Yeah, so the risks remain, obviously, but the whole space is undeniably maturing.
It's quite opposite to what we usually, or how we usually position crypto. Just as such a high risk asset, but it certainly is maturing. Definitely a space to watch.
Alison, thanks for unpacking all that, and thanks to our listeners. And please like and subscribe, and we'll speak to you next week.
Cool. Thanks, Chris.